So good afternoon, ladies and gentlemen. Thank you for being here to listen to my speech. I'm very delighted to be invited to speak today by Cambridge House, VRIC here. This is my first time speaking at this event. So thank you for being here. So today I'm going to talk about China from my perspective, from my firm perspective. And I'd just like to start off by looking at the next slide. So just a bit about myself, introduction. And my firm is called NAI Interactive. I've been with the company since the beginning, so it's the 20 years. This is the 20 years of our business, and we do investor relations and market research, a lot focused on the mining resource sector here in Canada. So we help connecting the North American capital market investment opportunities with the Chinese investors and market in Asia and here as well. So let's talk a little bit about the history of the Chinese outbound investment in the resource market. So back in the late 1990s, there's a government policy called Go Abroad policy. So that's ignite a lot of companies going abroad outside of China, looking for investment opportunities and partnering. And resource is one of the major sector. Natural resource is one of the major sector there. In the early days, you can see Chinese companies are looking to invest in the Australian market, ASX market, in the early 2000s. And then later on, we see more activities ramping up when the commodities market started to go up, rise, and they come to Canada because they're looking for more variety of projects and also looking for the quality of the management of the assets too. So these are some of the sample for the last bull market cycle, the bigger names. We have a lot of other transactions going on in the last bull cycle up until 2011 and 12. And so these are some of the bigger names. Just to let you know, to take a look, for example, in 2009-8, China National Gold actually bought Jinshan Gold. If you all remember, Jinshan Gold and Robert Friedland actually sold his stake to China National Gold, one of the state-owned enterprise gold producer in China, for a good amount of dollar. So they later changed the name to China Gold International Resources, now still trading on the TS6 called CGG. So I'd like to talk about the commodity focus for the last bull cycle. What the Chinese focus when they were looking outbound at the last bull cycle. Three major areas we see besides the typical gold. The first one is the iron ore. So they will have a big economic boom for iron ore, steel making in China. They're looking in Australia, but in Canada, the major areas, the Labrador Trough area, Newfoundland. So the big player at that time was called Wisco, it's Wuhan Iron Steel. So one of the major steel producers at that time, they were very active. One of the major investment early, they invested in a company called Consolidated Thompson Mine, a stand party deal. And later they make a lot of money because the companies got sold to Cliffs, the US producer. And then they make a lot of money from that. And they use some of those funds actually diversify and invested to a few junior iron ore producers after that. Company like Adriana, company like Century Iron also got invested. But all these companies didn't do so well after because the timing wasn't right. And also Herbie Iron Ore is also coming later. They take an investment stake in a company called Alderon Iron. They're still trading on the TSX currently. On the second part is the potash market. We see the last bull cycle, potash is a big thing for China. They're looking to help their own agricultural side. So the fertilizer business is huge. So they're looking at the potash quality in Saskatchewan as being one of their hotspot. So there are a lot of investment firm and Chinese companies come and take a look at our potash and investment into some of these projects as well. And the third one, being a copper base metal. Base metal is a big thing because as constructions, a lot of economic activities rely on a lot of base metal. So in copper base metal is a lot of interest from China. So one of these example is in the Yukon region, earlier stage, we see company like Chi Home Mining, they come and invest $150 million to that same project in Yukon but still there's no production plan yet as of today. So why did it stop? There's a lot of reason why it did stop. The China train cannot go on forever. So we see the commodities market, of course, slow down as a big factor. The timing-wise wasn't that good because a lot of these investments were invested in the peak. So it turned out a lot of companies, the asset wasn't as good as they thought they would be. So the Chinese group actually taking a lot of losses. So these kind of losses got highly publicized in China locally, and they got into a lot of bad press. So Chinese companies become very conservative after that. Another factor, major factor, is the anti-corruption. So a lot of crackdown. So during the peak times, Chinese companies, especially some of these state-owned enterprises, get a lot of investigation into some of the practice. And for example, one of the companies called Shenhua Energy got into anti-corruption claims, and they got investigated in terms of bribing the officials when they're doing this high-value transaction. So that actually turned out to be pretty bad for the senior executives for state-owned enterprises, and they say, hey, I cannot get into trouble by promoting all these foreign investment to the government because I may get into trouble myself. So that's also slowed down quite a bit later in the cycle too. So some of these characteristics. So fast forward, so after the last bull cycle, it ends about, we went to the peak in 2011, 2012, so the activity slows down, and we see some kind of activities coming back as the market becomes better since 2016, 17, and the last year. So this is now not only the state-owned enterprises, because we talked about earlier, state-owned enterprises get into trouble, and so they're becoming more conservative. So now it's led by other firms like the provincial-backed firms and also even the private investment firms from China. And Hong Kong is actually leading the way in looking at investment opportunities here in Canada and elsewhere in the world in terms of natural resources. And so they're also heavily involved in not just traditional sector, traditional metals. Energy storage metals is very key to the new development. So you will see lithium or cobalt and other deals being invested by a lot of these Chinese groups. We expect that trend to continue on. So these are some of the figures. These are talking about the whole, not just Canada, but the world global resales market. And we can see it's a growing trend since the downturn from the last cycle, 2015, 2016, 2017, 18. We see a growing trend of these outbound investment and M&A opportunities. So these are just number of dollar and also transactions. You can see it's steadily growing in the last few years. And where are they investing? So in the last bull cycle, a lot of investment into places like Africa, places like that, but they're now becoming more diversified. So you can see besides Africa, there's a lot of other places in South America, other regions. They are going back to Australia too, the market, and they're looking for other opportunities worldwide. So it's more diversified there because Africa is a bit also quite risky for them, and so they're looking at elsewhere in the world. So who is buying in the current cycle? So we see for the last few years, one of the main leading active players, GG Mining. You can see the names quite often. They also have a small fund, actually not just run by themselves, but with some other people here working for them, looking to invest in the junior exploration, a small fund too. But themselves, GG Mining is very active in the market because from the last cycle, I talked about state-owned enterprises as being conservative because GG is not a state-owned enterprises. They can actually act quite quickly. So in terms of doing deals, making investments, and doing due diligence, they're more faster than the typical state-owned enterprises. For example, you see them last year for the deal on Lefsen Resources. You can Lundin Mining will take offering a bid to take over the company, the project Timok,
but Levson were able to negotiate with Jijin, and Jijin were able to offer a better deal later on and acquire that asset and acquire the company fairly quickly in a normal business sense in terms of China. So this is one of the main players in the market now, and they will continue to do so, I believe. They're also not just focused on gold, they also focus on other sector too, because they're integrated mining company. They're not just a gold producer only. So Shandong Gold, there's a big partnership with Barrick Gold signed before, $300 million. So this kind of partnership gave them in the door for a lot of projects working actively with Barrick Gold. So Shandong Gold is a state-owned enterprise, but they're by working with Barrick, they get into all of these deals, and they're active in places like Argentina and South America. So I believe Shandong Gold is another player that was active in the current cycle. Zhaojin is a new player in the sector, and Zhaojin is because they're an emerging gold producer in China, not the biggest one, but they're starting to look in international market as well. So they took a minority stake in Sabina Gold and Silver recently, and I will look for them to look for other projects among the rest of the market. And another, we talk about energy storage minerals. Lithium is a big space, so we see the big player Ganfeng spreading their wings in the last 2 years, and companies like Lithium Americas is one of the company they were investing, but they're doing a lot of rather than just investment, they do a lot of partnership, offtake as well. So they're one of the major player beside Tenchi in China. Talk about lithium when we talk about lithium opportunities. So we believe one of the factors affecting the continual investing since 2016 and 17, and we will see that affecting the years to come, this year or later on. And we see the demand coming back for the raw materials. One of the major initiatives is the One Road, One Belt. And I will show you the map, what we mean by One Road, One Belt initiative. And this is the new policy that's set up by the government, that they want to go into different regions in the world for partnership, development, infrastructure. In order to do that, you work with locally, with the resources is one big thing, and the constructions, what's going on over there in those different regions in this initiative is very important, key to China's future success. And then we call it Made in China 2025. What does that mean? It means China wants to upgrade the material. They won't want to be just a manufacturing hub for the whole world. They want to become a technology, high-end material leader in the world. So the reason why you see the technology metal, lithium, cobalt, and other materials will get a lot of attention in the Chinese market is the main reason why. So in the next few years, you will see a lot of investment firm also very interested in this supply chain, in this market. So apart from some of the major groups that I mentioned about, these are some of the potential buying groups that I see. I've talked about the One Belt, One Road initiative. A lot of these engineering firms in China right now have not enough capacity. They're under capacity. They're not enough work to do, engineering work. So what they're trying to do, be creative. So if a project is a late stage in some of these regions, they may like to provide the services, and we basically, I call it for free, less than the discounted service in return for a percentage or investment into the company, the project itself. So we will see this will become a next trend for one of these bigger engineering contractors from China who want to build mining constructions or the road, railway. All this kind of work is important for them. And some of these other names are potential buyer we see in the upcoming bull cycle market too. And one more important note is to say, besides just the mining companies, the private investment firm is going to be the key to this, because they feel like the next bull market will got to be very strong. So a lot of these mining assets or companies, if they're trading at a low valuation, these investment firms will come and try to invest or even acquire the whole company, and maybe they can sell it out in
2 or 3 years time to another major, and then they can make a lot of money. So one of the example we see is company like a Hong Kong company who bought out Lithium X Energy in recently. So that's the reason why, because they are a completely investment related financial investor who like the lithium space a lot. So we continue to see 2019 the U.S. trade tension is become an issue. So during the last year, during the trade war, U.S. and China going on since April, actually Chinese dollar, the RMB, the yuan, have been devalued for close to 9.5% since April until December the 1st. And this is what's going on during the tariff war, for the trade war. And this has been probably on purpose for China to do that, because they want to offset that trade loss, the deficit that they lost during the tariff for the U.S. market. So the RMB got devalued for that percent. So since the negotiations started to talk again, resume, the RMB raised on the rise a little bit again to 2 to 3% since then. But the purchasing power of the Chinese companies will depend a bit on this. So this is very important factor to see in 2019, how the trade tension can be resolved, and if RMB continue to go down or go up, and to affect the Chinese purchasing power outside of China to do overseas investment. So this is just a final map to show you what I'm talking about, the One Belt, One Road. See that these are some of the region that they focus on. And remember, I talk about naphtha resources. One of the another side factor that why Xi likes that project so much is because it actually sits on within that region of focus in the Serbia, within the One Belt, One Road initiative. Of course, they like the project. It's a good asset. It's a really nice company. But they also do it because they also fall into this macro policy from China as well. So these are just some of the mining companies that we cover in our platform, and thank you for being here. I breezed through the whole 20 minutes with China, how do they go about doing things. I'm still quite positive about the ongoing investment and into the Canadian market, but also the resource market in here on worldwide. So this is just how you find us. If you have any questions, feel free to come and look for me, and we'll be in the conference somewhere here. Thank you, everybody.